What is up, everybody? I am Scott Melker, and you are live with a whole lot of legends here. I'm going to dispense with the niceties today and dive right into it. So unless you've been living under a rock, you've likely been glued to your screen following the saga of Wall Street bets versus Wall Street. Started with a group of self-described autists on Reddit, taking advantage of high short interest on GameStop stock, but has seemingly evolved into a power struggle between the haves and the have-nots. Short squeezes, gamma squeezes, they're nothing new in the stock market, but the optics of this situation would indicate that those are largely the domain of hedge funds and institutions and seemingly not allowed for the average investor. So as my friend Nathaniel Whittemore, who may join us today, said on Twitter yesterday, there are exactly two types of people on Twitter right now. Those that are absolutely convinced that this is an insanely significant cultural turning point moment, and people who don't understand yet that this is an insanely significant cultural turning point moment. And I think that that is very accurate. Let me just add Mike here. So I'm going to introduce everyone we have. We may have some other people popping in and out. We shall see, but go from around. We have Sam Bankman-Fried, who is the CEO of FTX and Alameda Research. We have Jason Williams over there, going parabolic, co-founder and partner of Morgan Creek Digital. Mike McGlone, who I don't know the exact title, but I believe senior commodity strategist at Bloomberg Intelligence. We have Dan Gunsberg, CEO of Hero Exchange, and Bill Barhydt, CEO of Abra. We actually had Michael Saylor scheduled to join, but he just bailed last second. Conflict. I didn't want to announce him just in case that happened. And we will also potentially be joined by Raul Paul. So I want to dive right in. I want to get a bit of context. Sam, you're the CEO of FTX. You worked at Jane Street Capital and have intimate knowledge of how exchanges are operated, obviously. Can you explain exactly how Robinhood's order flow actually works? Who's filling those bids at ask? Yeah. Why these platforms are likely shutting down? Because I think there's a lot of confusion as to what's happening there.
There really is. And, I think that when you think about, for people who are sort of crypto native, you're used to thinking of like, if I'm going to go buy Bitcoin, who am I going to buy it from? And you say like, Coinbase, like, Binance or FTX or whatever it is, the exchange is what you say. And the exchange is basically a lot of the full answer, right? It's like you're logging onto an exchange to buy it from a matching engine from that exchange, using risk engines from that exchange and assets stored on that exchange against another customer of that exchange. And this is why exchanges are a big deal in crypto. When you look at traditional finance, that is not how things work. When you go to buy, GameStop on Robinhood, well, you're going on Robinhood to buy GameStop, which is then using probably Interactive Brokers as their broker in order to sell that order flow to an HFT firm, which then connects to various technology providers to a matching engine hosted by NYSE. And then the full other process repeats on the other side. And we haven't talked about who's even like custodying these in the first place, right? So there's like 12 different institutions involved in that trade. And it's way more complex of a system and way more moving pieces. And so when it's sort of shut off, it's like, there's a lot of reasons that it could have happened. Any piece of that story falling down could have done it. What it seems most likely happened, and this is what the Robinhood people have sort of implied happened, is that basically Robinhood got margin called. And the reason for this, and you might think, wait, that's a little weird. Robinhood doesn't have any positions, right? Like it's just sort of sitting in the middle taking a fee or a spread or something like that. And that's sort of mostly economically true. But from a regulatory risk perspective, that's not how it's considered. And in particular, the U.S. government basically has enacted regulations that say that if you're sort of, even if you're sort of sitting in the middle here for customer trades, if they're sort of on your platform, it's going to take 2 days for these trades to settle. And, maybe some of this fiat hasn't settled yet either. Maybe you've pre-credited users. And so for sort of all of those reasons, there's some chance that one side falls over on this trade and sort of doesn't deliver the stock or the, dollars or something like that. And so they require you to maintain collateral for basically the trading activity happening on your platform. And I think the thought is basically that GameStop was so volatile and Robinhood users were buying so much of it that the minimum regulatory capital that Robinhood needed to post in order to facilitate those transactions was more than they had. They just they ran out of money and their clearing firms turned them off and basically said, you can't do this anymore. You're out of capital, you're out of collateral. We cannot legally allow you to allow your users to buy more Robinhood GameStop through your platform. So you have to stop that somehow. That is roughly, I think, what happened. Now that doesn't explain everything, right? And okay, sure, but why did they liquidate users? Was that really necessary? Could they have found other ways to cover this capital? I'm not trying to say this was the only option on the table necessarily, but I think that's sort of the thought about probably what the sort of weak link was here.
Hey, Sam, while you're going, would you mind covering the alternative hypothesis that's being floated, which was there's something far more nefarious that was going on at the direction, right, maybe Citadel or some big brother out there. I'm not saying that happened, but we all know that's another
totally. So, and my guess is that that's not what happened, but here's what that theory sort of is. Is that sort of the very anti-Robinhood theory here is that basically, okay, so there's Robinhood sitting in the middle, there's customers getting along GameStop, largely from Wall Street Bets, and then who's selling? I don't know, some set of firms are selling. Some of those are doing PFOF. Some of those same firms are also short GameStop, as it turns out. Citadel, I think, may have been one that may have been on both parts of that. And so sort of the conspiracy theory here is basically all right, well, the same firms that are selling to the customers through Robinhood are also the firms that are getting short GameStop and so want to go down and not up, and that they're losing a lot on their positions because they kept going up and they kept getting shorter and kept going up more, and that they went to Robinhood and said, you got to stop people from buying so the price goes down so we don't lose money on this trade. That's and there are a lot of variants on it that people have posed, but that's sort of the general structure of it. Something like that, I think, would be quite unusual to happen in finance.
What about the flip side of that on the shorts? Because it seems to me that, I understand that Citadel probably didn't directly influence Robinhood, and I get why.
Right.
Your explanation makes sense. But what about the systemic risk on the prime broker side for people who are lending these shares effectively with infinite downside risk? And so in theory, you can't have enough collateral to deal with all that risk in real time. And
there's no such thing as being fully collateralized on a short position.
Right, exactly. So it seems to me that's the bigger systemic risk in this model. When you melt up, you have these prime brokers that are lending out shares and those shares come from the public, as I understand it. And the public doesn't understand that they're actually lending shares to hedge funds. If the prime brokers basically are bankrupt, which can happen in a melt up like this, they're owned by the brokerages which service the consumers. So through a back door, the consumers are getting fucked. And they don't
could happen. And one way to phrase that is this is called a spot transaction where you're buying and selling actual equities. But if what's actually happening is the customer pays money to someone else to buy shares of GameStop that person doesn't have, and what ends up happening is basically they get these shares, they can lend it to the person they bought it from, so that person can sell them. It's basically a futures trade. And it's basically
exactly.
Now and as you said, okay, so now you're in that situation. There's no shares here. There's no limit to downside to upside potential. So couldn't the other side just totally blow out? And the answer is it could. And what you have to ask then is who's the other side and who's backing them, right? And how much bankroll do they have? And I think that you saw Melvin Capital. As it turns out, they not have enough bankroll to put on their short. And if the answer for who's guaranteeing these trades is Melvin Capital, that's pretty scary because they just did not have enough.
That's another way of saying no one, basically.
Right. Well, it's not no one though, and that's the thing, is that J.P. Morgan Chase does have enough bankroll to back the the other side of the of the GameStop trade. And so it's not no one. There's
but only to a point. But only to a point, because even then you could see a model. It's not about how much GameStop is worth. It's about how wrong the counterparty is relative to the amount of leverage that they've taken out in the system. So you can have a company that could basically melt up 6x, right, from a lower point, which could in theory bring down the entire system if the person that's basically providing that exposure on the other side can't deal with the collateral. You can see how it can unwind in a very ugly way.
So it totally depends how big they are. And if you think, so if it's actually literally JP Morgan Chase who's backing the other side of this, the max loss for JP Morgan Chase is the market cap of, is going to be the market cap of GameStop. They can't, like the long side isn't getting leveraged here. And so, you know, the max loss is, and however much capital you quote them as putting up here, where they have more capital behind it. And so they can't lose more than the entire market cap. And, you know, I think that like, then your question is basically like, I think they could probably lose $1 trillion roughly. I think that's the point at which the biggest banks in the world start. I'm ballparking that. And so the question is like, you know, what are the odds that that GameStop gets to $1 trillion market cap? It's not zero, but you know, I don't want to disclaim that risk entirely. But I think that's not the biggest risk if, and this is a big if it's actually JP Morgan who's backing it. But if it's not JP Morgan, if it's a $10 billion fund that's backing this, then absolutely they could blow out.
And that's only 30x, by the way. You know, it sounds crazy, but this whole week has been crazy. So pick your crazy and move forward. I mean, that is a non-zero probability, what you just described.
Yep, I definitely hear you on that. And so, you know, I think the big thing that I'd say here is that when you trace through this, right, who has the exposure, who actually has the exposure, the ultimate liability, and what you get to is who are the clearing firms here, right? The question you start asking is not even who are the trading firms, right? If it's Melvin Capital or Citadel or whoever who's literally on the other side, that's not even quite what matters. What matters is who's guaranteeing them if they blow out. And the answer probably is that they have a clearing firm. And then you're like, who's their clearing firm? And usually the answer is, okay, infinitely big, right? Now, it's not always the answer. In 2008, everyone had a clearing firm. It was Bear Stearns. And it turns out Bear Stearns did not have infinite balance sheet. They had finite, and it was, you know, manifestly finite. And so, you know, once you get to that $1 trillion loss category, it starts to get scarier. Or if you have some, like, if your clearing firm is not, in fact, you know, up to the challenge here, I don't know what the answer is here for all of these, but that's the sort of thing you'd want to track down is ultimately when you have ultimate recourse against the people who are short here, which giant financial entities are ultimately guaranteeing their deliverability.
I'm curious then, obviously the knee-jerk reaction was nefarious intent, right? Robinhood shuts down its users to screw the little guy while hedge funds trade in the background. So the question then remains whether that's the case or not, which you've sort of addressed. It could be both. But we do know that your average retail trader could not buy and that hedge funds and institutional traders could.
Well, Scott, they could not buy, but they could only sell.
Correct, which was what happens to price when
you're really weird.
Super unnerving and super weird.
Yeah, it is fucking weird. Like market halts happen, like circuit breakers happen. It's a little weird, but it's a thing. It's how the world works. Stocks just don't trade for 5 minutes sometimes because they move too much, and you sort of have to accept that as a fact of the world. I've never seen this before. I've never seen a sell only market like this. That's not a thing.
Yeah, because Sam, possibly the shorts came back, right? You put your short position back on, and you have sell only. Now I'm back, right? I'm back in the game.
Certainly, and this would have been, I mean, if you'd seen that news coming out first, would have been a really good time to put on or increase your short position, or put it back on. And conversely, this is another really ugly property of this whole episode, is what happened then next is Robinhood fucking liquidated a lot of their customers. And I think, and I don't know this for sure, but I don't think these were customers for like getting 3x leverage. I think these customers were all 1x leverage. I think they're effectively fully funded, but Robinhood took the position that either they're funded with ACH transfers, which technically they could try to claim back, or that there's some just like stupid clause in their terms of service that every trade is a margin trade unless you decide to call it something else.
I think it's that, Sam. I actually talked to a friend of mine who runs
really think that was it?
I mean, it's one like I just talked to a friend not too long ago who's the CFO of a fairly sizable long short equity hedge fund, and he had said there was a lot of discussion around some fine print in the terms of service of Robinhood and being able to impose it. He basically said that everybody on the street was very certain that what they did was actually, like from a technical standpoint, legal. Obviously, the social credibility and the impact to customers is, basically catastrophic at this point.
Right.
But that they actually had the ability to like change risk slides on the fly to take out whoever they wanted, and maybe it was exactly what you said. Like the person that bought that stock actually didn't own that stock technically.
Right. Well,
Even
the
though
ACH risk is real. Right. The ACH
Right.
risk in the United States is real. You have 60 days
Yeah.
to
The
basically
ACH is a
charge
real
back
thing.
a transaction in the United States. You could have been in and out of GameStop 17 times by the time that chargeback gets processed. And Robinhood is out 100% of that cash, no questions asked. And this is an even worse problem in crypto. So we deal with it every day.
Yeah.
People, the Bitcoin's gone when the chargeback happens. And so in this case, it's a problem that they normally don't have this acutely, if that's a word, that I can understand. They didn't. If that's really what's happening, they should have just told people that this is the risk. We can't deal with it. Why they wouldn't just come out and say it? I mean, they would have looked at least infinitely better coming out of that if they had said that than by effectively saying nothing and liquidating people, which makes no sense whatsoever.
Yeah, we didn't expect this type of
Exactly.
outlier event. Like our risk slides didn't account for it, and we fucked up.
Exactly. And going forward, like, okay, you have this fine print, but like the GUI matters. How you display a user's account to them matters. And like, when we build an exchange, we're usually pretty careful to like try to make it clear to the user when they're doing a margin trade and when they're not.
Mm-hmm.
And so like I would have thought that they would have wanted to make it clear to you. Well, not that they would have wanted to, but it would have been the right thing to do to make it clear to a user if this is how they're treating it. And also, sort of have like a mea culpa of like, look, we clearly like, I mean, it's sort of a really out-tail event, but going forward to address this, we're going to be massively more transparent about how we're treating your positions and how we're treating, if it's ACHs, I don't know if that's what it was, and maybe you're right, maybe it wasn't the ACH, maybe just everyone. Like maybe it was this line in their term of service that says, unless you opt to check this box that you're not going to find, we're going to call it a margin trade, even if it's fully funded.
I have another point on that, though. This is more from the Melvin Capital side that I can't make sense of. These are technically kind of like fiduciaries of large pools of capital. Why is somebody like that taking a short position and then buying listed puts? Like if they were, what my understanding was that they actually had like massive listed put positions as well.
Probably because they couldn't borrow enough shares.
Yeah.
So once they do that and then people start digging, like you start as a four-legged table, like you just kind of kicked a leg out from under yourself, right? Like most hedge funds of that size, they protect their shorts publicly, like as much as we would protect our private keys. Like they don't want the world knowing. Like why do you think this fund was so willing to be so vocal and so out there listing puts? Like it's just putting it's an edge that you're giving up to the rest of the world if you get in a position like this, right?
Well, who would have possibly thought that a company has physical retail stores in the middle of a pandemic, selling games that you can buy online and download in 5 minutes without having to put a mask on and leave your house, would basically have a 10x run up in price? It's crazy. So, I mean, if you look at it from that perspective, what risk are you taking as a fund that a bunch of people are going to get on Reddit and create a short squeeze of epic proportions?
The world has changed. Obviously, we've been living in a tale for. I mean, like 6 months ago, we were watching people walking down the street and getting hit over the head with skateboards.
But now you're sitting in the conference room, the virtual conference room, having exactly that discussion before you do it. And you say exactly what I just said. Okay, we're going to enable the mother of all squeezes if we come on. Nobody is going to believe that in the conference room having that discussion. And yet that's what happened.
But why wouldn't they believe it if we just saw Hertz do a 5X when it went bankrupt?
Yeah.
So the notion that they couldn't have been prepared for it, to me, is a bit dubious. Like these firms are not set up to be surprised by a bunch of guys on Reddit. So I think that if that's going to be their excuse or their position, I think that's somewhat absurd. Mike, I don't know if your internet's working over there, but you're the closest to the street here. You're researching this stuff on Bloomberg every single day. What are you guys seeing over there? What's the general thinking on this? Yeah, Mike might be frozen.
Thank you, unfortunately.
Yeah. So all right, we can continue on there, but yeah, I just think that we can go back 12 years and see examples of this. There's nothing new here. That's what blows my mind.
Yeah, this is extreme, and I don't want to argue against your point. This is poor risk management. Obviously, it's sort of, certainly history shined well on that point, and so but I'm not shocked that people didn't see this as a huge risk going in. There's just like, it's the kind of thing that doesn't blow up that much. And obviously it did this time and sort of kind of to an unprecedented degree. Remember Hertz, right? Hertz was a big deal that you mentioned. What was Hertz market cap at the peak? I think it's like $2 billion, right? Like I think there's a company that went from like $200 million to $2 billion. It was like it did like 5x or something, but its market cap never got above a few billion during that rally, I don't think. And Melvin Capital had more than a few $1 billion to lose. And so this would have had to get a market cap of 50 times how high Hertz got to blow Melvin Capital out. Now that is exactly what happened. It did, not 50 times, but I think it got to 10 times, right? So it did in fact get to just massively higher, but it was an even bigger outlier than sort of we'd seen before in this. Tesla, I think, is maybe a better example, although it played out way slower, and so people had time to cover their shorts before they blew out. That was 2 years instead of 2 days. One other piece of this, though, which is another, again, it sort of like follows from what happened. It's sort of like, yeah, okay, I can see how this happened. What train of things led to it was really not a good fact. Robinhood, they turn off buying, it's sell only, and then they liquidate people because of some clause that maybe shouldn't have existed in their terms of service, and because they're kind of getting margin called maybe, and they liquidate people, and you can just, if you pull up a graph of GameStop, of GameStop stock over the course of that day, it's not going to be hard for you to circle the point at which that liquidation happened. Like, if you want to figure out what price all of Wall Street Bets was forcibly liquidated at, like, just take one look at that graph. You're going to know where to look. It's like at $480 an hour before, and then 30 minutes before, it was trading at $320, and then it prints down to $115, and that was the liquidation. And then an hour later, it's back up to $280. And so not only did they turn off buying and then liquidate their customers who are kind of morally looked like they were fully funded, but the liquidation probably printed stock down by a factor of 2 to 3 and filled most of the customers at that low point at like about 40% of fair value.
Yeah, free market, right? It doesn't sit well. And you talk about Melvin Capital, and they're still in business today.
Yep,
GameStop.
Yeah, magically the machines.
The ultimate. Isn't this what this is all about? Like Wall Street Bets is. You want to talk about who the real Robinhood here is? Like they threw a mega lifeline to a brick and mortar. Like that is what to me is like one of the most unprecedented things about this. Like, is this the first time in history where a mob of like 18 to 34-year-old day traders rallied around an idea? And like, look at everybody's intent is different. I don't think this was like purely looking to Robinhood the situation, but goddamn, it worked.
Shouldn't GameStop be doing a $5 billion at the market offering at this point? I mean, why hasn't it happened? I mean,
totally.
That's irresponsible from my perspective.
So Hertz Perth tried this.
Yeah.
When their stock rallied, they immediately did it, filed for an offering. And their offering, I mean, Matt Levine had a great piece on this. Their offering document was like, our company is bankrupt and we have massively more debts and assets and no business model. You're not going to get any money from this. Don't invest in our stock. It's going to zero. Please buy our stock. And so they filed this, and it was well written from a legal perspective. It had all of the necessary disclosures, and boy, were there necessary disclosures there. And they filed it, and the SEC looked at it, and they said, "Fuck you, you can't do that." And they just rejected it.
But I don't think GameStop is as bad as where Hertz was.
Not.
I mean,
it's not. It's not going under right now. It's just like not kind of a little moribund, but
right.
That being said, I do think that there'd be really heightened SEC scrutiny on any issuance or secondary offering from GameStop right now.
They've got to be working on it, though. I mean, I just, they're crazy.
Yeah, totally. It'd be insane not to be. I mean, I would sell almost like there's a lot of companies I would sell for $30 billion, and boy, would GameStop be one of them.
Absolutely.
If I had it to sell.
Amen. Yeah. Think about what businesses they could get in with the knowledge they have, right?
Exactly.
Like, vis-a-vis what Disney did at the beginning of the pandemic. I mean, you can do a 180.
Yeah. They could sell their business and buy a different real business.
Yeah, like Bitcoin.
right.
Well, hey, that's funny, but let's talk about that. So I think we've covered the theories as to what may have happened here, and I think it's clear that it doesn't sit well with any of us. I know for a fact, my friend Steve Ehrlich, I talked to him yesterday, he's the CEO of Voyager Exchange, and they were getting 100 signups a minute yesterday, largely on a mass exodus from Robinhood. So Voyager doesn't offer stocks. They only offer crypto. So those weren't, maybe they were people who, trade crypto on Robinhood. Maybe they were people who heard about crypto and just want to try it because they were degenerates who were trading stocks. But what does this mean for Bitcoin and crypto? Sam, you launched Blockfolio stock trading yesterday completely randomly at the same time. This was
complete coincidence. It was unbelievably timed. I mean, it's literally like the day that we launched our Robinhood competitor, Robinhood shits the bed, and it is not planned. It just happened. But it's quite lucky timing. In addition to that, we also pushed out a bunch of not coincidental products on FTX as well, including a bunch of the popular stocks, and we can do that internationally with the CM equity license. So, and basically like huge growth, obviously our platforms, and I think probably a lot of people's on this call's platforms yesterday, and huge growth in crypto. I mean, crypto market cap is up a fair bit. It's volatile. Nothing is up as much as Dogecoin, obviously. And why is that? You don't have to think very hard about why that is. It's a pretty straightforward story. Like, Robinhood shuts off buying of GameStop and all of these other stocks that WallStreetBets has just bought a few $1 billion of. And I don't know, where are they going to turn? Probably crypto. What coin are they going to buy first? I mean, I don't know. I don't think I have two guesses. I don't think. I spent a while trying to think about another token that was plausible, and there just wasn't. It's definitely going to be Dogecoin. And so like that flows. The Robinhood, WallStreetBets crowd, it's had massive inflows into Dogecoin. Yesterday was up 10x or so.
Yeah, we're seeing similar numbers as well. I mean,
I was going to say, three of you here can speak to the volume of signups because
crazy.
It's your business.
Yeah.
Is that something obviously that you've seen in the last 48 hours?
Totally. I mean, our user number, similar per user per minute registration numbers that you mentioned with the other company. Average registration numbers are up like 10x in the US versus like 3 or 4 days ago. Our transaction volume overnight. Basically, I think in like 5 hours, we did the previous week's volume, and that was already a record. So it's just every time I think it's going to slow down, it actually accelerates. And I don't see any, I don't see any like stopping it. And in the back of my mind, I'm going, okay, this is going to slow down again. And every time I say that and it may be a coincidence that there's a new reason, but there always seems to be another reason why it doesn't. And then when I thought that the Doge thing was dying down at 1 a.m. last night, maybe just a little bit, Elon tweets puts Bitcoin on his title of his Twitter thing, and I wasn't even looking at Bitcoin at the time because I was on a clubhouse with 3,000 people trying to explain why Doge isn't a long-term investment. And the next thing I know, Bitcoin's at 38,000. And my team is texting me that our numbers just like doubled from 2 hours before. And it's just pure insanity. I've never seen anything like this. And .com, nothing like this.
Hey, Bill, real quick before we move on, I was moving around different exchanges today, and a lot of them were broken. Coinbase was having issues. Kraken was just off. I had issues with that. I think Gemini was up. BlockFi stayed up. Did you have any issues with maintaining or dealing with the volume of new users, transactions on the site?
Yeah, we never had a minute of downtime. That's the good news. If specifically to Doge, we had delays from our exchange partners in getting the up to the second spreads because we're spot purchases only. We're not an order book. But we actually integrate with order books, and we have to go deep into their order books and manage that for our users who don't understand what I just said, right? So doing that in a way when things are moving 5% a minute, right, and not having pissed off users who are going deep in either direction is very difficult, and that slowed down for a couple hours. So people got spreads that were a little bit out of whack, but we never went down. And even like when the Bitcoin went up another order of magnitude, never went down. Now, our challenges are unique because we don't run an order book, but we get way more people using our mobile app on some days than some of the large exchanges do, and so it's a different it's a different challenge, but equally large, right?
So we obviously saw this knee-jerk reaction of people signing up and coming over to crypto exchanges, but listen, Robinhood's going to settle down. People are going to be able to trade stock, right? So does this have a lasting long-term effect on the price of Bitcoin, the interest in Bitcoin? Do we actually get more of the, hey, this system sucks, let's burn it down and go to Bitcoin narrative that we all love and have actually seen coming into play for the first time during COVID and in the last year? Or do you think that this becomes some huge nothing burger in 2 weeks and becomes one of these forgotten things and everybody goes back to margin longing stocks on Robinhood?
It could go either way. I think it's super on the fence exactly how much long-term impact this in particular will have. Now, I think this in general is having massive impacts on a lot of areas of the world. This sort of general trend, which has been playing out for years and accelerating. But if you instead say specifically the Robinhood issues yesterday, I think it median case scenario has some but not huge long-term impact. But I do think there's a tail case where that alone has massive fucking impact. And in particular, if you want to talk about other than it loses some of its business, what would be the huge long-term world impacts? I think basically the story you say is that was a camel, the straw that broke, whatever, that's
the camel that broke the elephant's back.
I think that caused the big thing. The camel that broke the straw's back for Elon Musk. And that's the reason that Elon, put Bitcoin in his profile. And that alone, I mean, okay, Elon, he has, as it turns out, a lot of money right now. And what happens if he, and literally just he, what if the only impact of this was that he decides to buy Bitcoin and nothing else? He has $150 trillion, billion dollars right now. If he does to put half of his net worth into Bitcoin, I don't think he can because I think he's all in Tesla stock, but maybe he can borrow against that. Whatever. He decides to buy $75 billion of Bitcoin, either himself or Tesla or something like that. How much impact does $75 billion of Bitcoin have? I think it probably doubles the price of Bitcoin. And
at least.
Yeah, and now you're looking at it at $70,000 Bitcoins, and Elon Musk proudly tweeting weekly about all the Bitcoins he's buying. Yeah. And he's not going to be the only one who does it if he does it, right? 10 people are going to follow. And I think it's one of these weird things where sometimes 10 people in the world have unbelievably large impact with random decisions they make. And he's one of them right now. He's on that short list, and it's him, Trump, Biden, I think leaders of 3 other countries. And I maybe LeBron James, and I mean that I think you're kind of running out of names pretty quickly there, and yeah, that could actually permanently change the course of the trajectory of crypto.
But it can be rocket fuel, but it's not the rocket, right? I mean, the rocket is what it is.
Yep.
This is going to do what it's going to do. Bitcoin doesn't need Elon Musk. It doesn't need, it doesn't even need governments to keep printing money, right? These things are accelerants, right? The model for Bitcoin is sound. And in my opinion, it's going to do what it's going to do. It may get pushes along the way, like you just described, via these individuals. But the fundamentals are the same. That's why they're fundamentals. And so, in 5 years, I don't think anybody's going to care whether Elon Musk put 5, 50 or $0 billion in Bitcoin.
I feel like it's sorry, Jason, go ahead.
Well, I was just going to make one other point, Bill, which I really appreciate what you're saying here. And this has been a great example to me of like, okay, Elon Musk is rich, but it's really interesting to think about 1 million people with $1,000. And they all point that money in the same direction because they have information that maybe wasn't available before. It's super powerful. And I just want to add one other point. I tweeted this morning, which I think is really important. If you're getting a product or service for free, you are the product or service. So please remember that. I think there's a lot of things that are going on in the back room of Robinhood in terms of monetizing activity and data that has been used against these clients, and they just may not know. And the same goes for like Twitter and Facebook and TikTok and everything, but people need to be aware of that as well.
Yeah, Dan, I know you were about to say something.
Yeah, I just think there's this, whether it's Elon or like the social impact is really is massively important here right now. And I think that's something that, we've seen what a large number of small people, when they band together, can actually do. And that really is where the power is. Like, you're just seeing this, like, it went from social, like 2020 was so socially driven and politically driven, whatever. It's now moving into this financial game, and it's causing course correction. And at a minimum, it's like, it's kind of the confluence of like many different instances happening, one thing after another, that may build up to force some type of change here that can be impactful. Like, is it going to go like, is it a binary outcome that like, oh, now censorship resistant networks are going to rule, dominate the world and everything? Of course not. Like, this is a marathon to kind of get these types of things working, but at least it's moving into these, like I was telling you, I was talking to that guy who was a CFO, a friend of mine who's a CFO of this long short equity fund. And like, he's like, these guys are just actually getting to they're actually just like now allowed to buy Bitcoin. So there's this like major lag socially. I think we kind of, it's easy for us to miss that because we all talk to each other all day and, in Twitter and whatnot. But, there's definitely compounding effects here. And, at some point, Elon will change to start talking about something with SpaceX or something with Tesla, and this will die down, but then it'll come back again. And like, it feels like it's like the beginning of a rally. You kind of like, you get a nice move up, you consolidate, you get another leg up, you just kind of keep building on it. And that's kind of how things go.
But I think there's a broader point that's very difficult for the average person to understand. And that's how exponentially growing technologies actually work.
Yeah.
And the math behind exponentially growing technologies, and also how kind of network theory, like take Metcalfe's law, like, for example, how that works in terms of growing the value in a network. It doesn't require Elon Musk to increase its value, right? His particular hub in a hub and spoke model can actually help propagate things a little bit faster, but the hockey stick long term looks the same, right? So that's my point when I'm saying, like, if you add more people to Bitcoin over time, right, the value of the Bitcoin network will continue to grow exponentially, and it doesn't require a billionaire to be one of those nodes in the network to get there. Just like Facebook didn't grow because it had like an ultra rich person who came in and became like a key influencer. It's just the nature of something that spreads virally. And while Bitcoin doesn't necessarily have that. It's more of an Austrian economics principle that's allowing it to spread at an exponential rate, which transcends any one person getting into it. And I'm not trying to preach about why it is. I'm just saying that I believe that's now an established fact, that this is what's happening, and I don't think you can stop it now. And so while I agree with your point about it's not a fait complete that it's going to do these things to censorship resistant networks, the rate at which it's growing, it's very easy to extrapolate if you think exponentially to see that this is going to eat the world financially, right? If it doesn't stop. And then the question becomes, well, what would cause it to stop, right? And so if you think about it that way, then you end up with a very different perspective on where this is going.
Sure. Well, listen, all that said, I hope to God it continues to move at a parabolic rate. So yeah. I'm doing my part to help that happen. So
yeah, I want to touch on something Jason said was so interesting. Obviously the notion that 1 million people with $1,000 are more powerful. I think the first time I became aware of that was the Bernie Sanders campaign, like two campaigns ago, and all of a sudden he was outraising opponents with $10 and $50 bids. And that's interesting and compelling, but do we believe that that's what actually was happening with GameStop? Do we think that it was actually a bunch of people with $1,000 that were pumping the stop? Or do you think that somebody else was actually behind this and front running the move? Because I've obviously heard theories that make a whole lot of sense that, if a hedge fund really wanted to move the price of something, why not buy a ton of it and then, kind of create that FOMO or that retail interest and start pumping it on Reddit? We don't really know who WallStreetBets is. I'm not saying this is true. I'm just curious, would it be a surprise to anyone if it wasn't the little guy that was actually making this happen?
I mean, can a prime do that anymore? Like, didn't Dodd-Frank change that? Like,
yeah.
I mean, I remember I don't know if anybody was familiar with like Amaranth, like in 2006 with in natural gas, and they got caught on the wrong side of a trade, and it turned out that their largest counterparty was JP Morgan, who was also lending them the funds to put the trade that they had on. They had the bilaterals on against them. So and suddenly when they needed the extra $300 million to make margin, those funds had been rehypothecated magically. I mean, so is that still possible now? I actually don't know the answer to that. I'm actually
I don't know if it's possible, but they did it at the top. I mean, they turned off retail and allowed big players to make their trades.
Yeah, anything could happen. I would guess that more likely is that it was started exactly as it seems by WallStreetBets. But once it had started to gain steam and once it had gone from $20 to $40, some hedge funds, some hedge funds put on bigger shorts, but some other hedge funds were like, oh, this sort of looks like Tesla, I'm going to buy. And so I think that like my guess is that it wasn't started by, some behind the scenes hedge funds, but that as soon as it started to become talk of the town, a lot of people threw money in on both sides. And that, I wouldn't be shocked if there were some pretty big players who were getting long once it started to catch steam.
Right. So it became a momentum trade effectively for bigger players to ride. Yeah, I just think there's people who think that the notion that it was literally all just small buyers that drove the price up into the 400s.
Yeah, I don't think that, but I mean, I think they actually may have been able to. I don't know.
With enough leverage.
Yeah, it depends on how many. If you have 10 million of them and they each put like 10,000 in, then you can get there. Now that's a lot. I don't think they're putting that much in. 10 million each putting 1,000 in. Does that get you there? Yeah, I think that might. It's a stretch, but yeah, I think it's more likely that they did a quarter to a third of the work, and then another third was the liquidations, and another third was momentum buyers.
Mm-hmm.
Yeah,
or something like that.
Scott, I've got to bounce, but I wanted to say thank you to all of you for having me today. And I wanted to leave everyone who's listening with 2 points. And this is just my opinion. It doesn't represent Morgan Creek in any way. Like, I think that Wall Street game is completely rigged against you. I think it's very hard for the small guy to get an edge there. And just buy Bitcoin. It doesn't do this. It doesn't do any of the things that you're dealing with here. If you just own Bitcoin and hold Bitcoin, you've been outside of all these shenanigans. You're just sipping coffee. You're just chilling. You don't have to worry about any of this stuff. Like total brain damage. Yeah. Bill knows. Bill knows.
Yeah. Short the bankers, bud.
Thank you, Jason. Appreciate it, man.
Short the bankers.
There you go.
Out.
All right.
And if at any point any of you guys need to bail, of course, totally cool. Just like that. This is very informal. So, I mean, but what Jason just said. So, just buy Bitcoin and sit. It takes us back, though. I just really wonder if there's going to be an inflection point here. I mean, Bitcoin, I don't even know the price right now, but obviously it's having its own volatile moment here, right? I mean, can those people who just experienced GameStop stomach 20% up and 10% down in 5 or 6 hours?
I mean, it's a good it's a good question, and I mean, the question is, which people exactly is it that we're worried about? And but I mean, I think there's something but I also think, frankly, that like from this perspective, I mean, you also have to be thinking about this from the I mean, like think about March 12th, right? Think about March 12th in Bitcoin, and I mean the same things that people are saying right now about GameStop and Robinhood, people are saying then about Bitcoin and BitMEX. And now it was really more probably about BitMEX than it was about Bitcoin, what people were saying. And so, but it's not like you've never seen patterns like this before, in crypto. And in fact, I think far from it, like most of the people in the world would describe this as the most crypto-like thing that has ever happened in traditional finance in some ways.
I mean, Sam, most people are freaked the fuck out right now. Right. That's what's going on.
And we're just like, this is Tuesday,
we're like,
man.
this is normal. This happens
right,
every
exactly.
minutes.
Like,
right.
This is like, we look at GameStop and we're like, geez, like, did Binance just list it or something, right? And it's like, oh yeah, it's up 10x today. Like, I wonder when it's going to crash down. Like, is someone faking this volume? How levered are people? Like, their liquidations are going to be huge clawbacks. It's sort of like what's going, and that was actually the right thing to think here. But it's not usually how finance works. So, I do think there's some interesting parallels there. And unless you think that March 12th was just the BitMEX story, I mean, the entire fucking industry was leveraged long Bitcoin. Yeah, like is the Bitcoin miners whose businesses are like having future Bitcoin revenue streams and assets tied to the price of Bitcoin, hedge that by going and selling their non-existent dollars to buy more Bitcoins. So like there's a lot of leverage. It's all in one direction. And yeah, things went down a lot. It was looking ugly for a few hours there.
Do you think that so two things. One, I'm getting pulled into the kind of traditional financial markets discussions exactly because of what you two guys just said, that it actually looks more like a crypto model than it does a traditional financial model, which I come from traditional financial markets and then got into crypto, like Sam, but they don't know that. And so you end up getting pulled in and they're shocked that you can actually explain it in their terms. That's one. And two, I guess I would ask you, based on what you just said, because, having lived through the March 12th, I often wonder what would have happened if BitMEX didn't go down when it did. But I'm wondering, I don't pay enough attention to what's happening with the prime brokers and the leverage in the existing system right now. Do you see it getting to those levels, or do you see like isolated cases like GameStop being
I think it's pretty unlikely to get to those levels. It's not 0%, and 2008 did. Like 2008 was the last time that that we saw something that looked like March 12th, and it wasn't maybe quite as bad, but it's pretty bad. I mean, Bear Stearns was not the kind of place people would have expected to blow out, and then it did. And there are sort of stories that sound like kind of the March 12th stories of like phone calls on the street between Goldman and the SEC, or president, or a roundtable, a lot of economic advisors, and they're just like, all right, here's how many days we have left. And JP Morgan's like, oh great, we got 3 weeks left before we go under. We're the healthy one. And basically the whole story is like, all right, here's we're gonna level with you. Here's what everyone's balance sheet looks like. If nothing happens in the next 3 weeks, here's what we think is gonna happen. And as soon as they said that, the government was like, all right, I guess something's gonna happen then. And bailouts came, and it didn't happen. And the better capitalized half of Wall Street survived. But it got pretty bad there. I don't think it's getting nearly that bad now. things are way better capitalized in general than they were in 2008, specifically because of 2008.
Right.
And I think that, you know, one sort of interesting, like, one interesting piece of this whole Robinhood story is that, okay, Robinhood almost certainly fucked up pretty badly here operationally, and like should have had a better plan for this. Putting that aside, if you say that like part of the thing to blame here is the margin call, and the fact that like Robinhood was forced to shut down users' positions because they didn't have enough collateral, where is that coming from? That's coming from the response to 2008. Like that thing right there is that regulation is directly a response to the 2008 crisis, saying you have to have some collateral for these positions, even if you don't think you have positions on, even if you think it's just customers' positions, and you don't have any exposure, you don't know that your customers might fall down. You have to have some protection against that, and they didn't even have that, and it was sort of a preventative measure of like, you know, you got to shut this down before you let it get to the point where you can't control it, and where actually you might blow out and your customers might lose all their money for no reason, and that they're getting dangerously close to that point. And one last point I want to make about this story is, if you do the math, okay, I have no idea what the positions were. It like seems like maybe Robinhood didn't have very much money. I'm like not sure about this, but I like don't, unless the positions were massively bigger than I thought they were. Maybe they were on Robinhood. I don't think they were being required to post $10 billion of collateral here. I think it was like 100 million or something. I don't know exactly, but like for a company with Robinhood's scope and valuation and impact and size, like the numbers make it seem like maybe it's a little bit surprising that they didn't have more funds in reserve for emergency scenarios and margin calls than they did. And maybe the fact that they got margin called on these positions is reflective of, I mean, A, the system working as it's designed to catch the fact that B, Robinhood really didn't have that much capital backing these things. I'm not sure that that's true. It's all speculation based on position sizes, but it does sort of like what happened when I first sort of tried these calculations.
But they did announce like $1 billion raise, right?
They directly after did this.
Explicitly,
yes,
to address this issue from existing investors.
That's right. And so, which makes a ton of sense. And if this is the story, then great. They've got a lot of protection against this going forward. Also, though, they really should have had more before this, and like they should have known this might happen. They should have had a plan, and like you know, if I kind of think maybe they just had egregiously little capital.
That's what I think.
Backing this,
yeah, like
I think they're probably cutting it pretty close.
I mean, they went self-clearing like not too long ago, right? Weren't they?
Yeah.
Wasn't it like or was it Peak Six or Apex or somebody was their clearing clearing entity, and then they went self-clearing, and like. I feel like with the growth that they've had, you'd want to have your risk metrics and your capital requirements against those like so cushioned. Like you'd need like a meteor to hit the earth.
And it's not like you had to have gone out and raised $1 billion and selling 5%, 20% of your equity or something for that, right? Like you're fucking Robinhood. Like if Robinhood before this had gone to JP Morgan and Goldman and all the banks and said, hey, can we please have a revolving credit facility? And we need to be able to draw up to $1 billion. And here's why. We're going to go through in detail why. Is nothing to do with our financial risk. This is all reg capital.
Yep.
This is not actual losses. This is we need to post margin on behalf of our customers. And we want to make sure we can handle anything. And we'll pay you guys collectively $60 million a year for the right to once every 2 years draw on $500 million of capital for 2 days. I kind of think they just could have gotten that line.
Yeah, it's a fucking put. Yeah,
exactly. I think they could have paid for it. I don't think it would have been that expensive. And I think it would have protected them against this. And I mean, if I were them, I think I would have done that.
Totally.
Do you think this is a situation where, I mean, this isn't exactly 2008, but where now all of a sudden regulators pay attention, we see more regulation, more rules, more things put in place to avoid these situations? Or do you think that this is a black swan? And
I don't think we should. Well, okay, not to avoid the risk piece of this. Like my reading, if this is all right, is the risk systems work well. They successfully caught this and shut it down. Now the fuck up was like Robinhood getting themselves in this position in the first place. I would guess if there's new regulations from this, it's much more likely to be on the consumer protection side. And it's much more likely, rather than looking at the Robinhood risk side, it's going to be looking at how much of that they passed on to their customers And in particular, like the terms of service that treated these as margin positions, like if I were regulators, I would be having a hard look at that terms of service and whether that's actually something that you should be allowed to slide in the depths of the terms of service, or whether you should have to make it visually obvious to customers if a fully funded position is not being treated as such. That is the kind of thing that if I were regulators, I would be looking into. And response here combined with looking into if you can do this asymmetrical shutting off. I think that's sort of a weird thing. Maybe, you know, there should be some sort of regulations around whether you can turn off buying without turning off selling. My guess is that's what people are going to look at the most, if sort of my understanding of what happened is correct.
But I think it's a little disingenuous for AOC and Warren and others to, and ironically, apparently Ted Cruz on the other side, to actually be questioning, you know, whether a regulated entity that has these risks can actually shut off these services without actually digging in to understand the rules that they're supposed to be enforcing themselves.
Yeah.
And it just shows how woefully ignorant our own Congress is about what they're over regulating.
Well,
and we're very likely going to end up with more bullshit regulations that don't add value to consumers as a result of this, that they're also not going to understand themselves.
Yeah,
it's incredible.
I think that's right. And I think an important piece of this also is, you know, frankly, if you're like a junior senator who's not on any finance related committees, I don't know, like you have to know the details of like Dodd-Frank as it applies to like Robinhood and customer positions on. No way. I think the problem here isn't so much that they don't know it. I think sort of like, I think they should know they don't know it. Right. And I think like, you know, rather than saying like, here's my position on it, we got to have an investigation. Like I think a reasonable statement would have been, you know, I noticed a lot of our constituents have complained about this. Pursuant to that, I'm going to go do some research on this and go talk to the experts on this and kind of get the backstory here and talk to the players, you know, in the game here, so that I can figure out, you know, what the context is and if there is something, you know, potentially bad that happened, and you know, if so, what the right way to approach it is. I think it's sort of like that. That maybe would be like a more context appropriate response.
Yep. Yeah.
I think it's also worthy of noting that it wasn't just Robinhood.
That's
Oh
right.
yeah. Also, everyone. That's a weird thing. I agree. Like, why Schwab shut up? Like, I don't know. That.
I mean, TD, E-Trade. I mean, they
do
all
you think they
did
got?
it.
Somebody told me also that they thought that there was actually subpoenas flying around.
Well, certainly congressional subpoenas are going to be flying around.
Well, this was like, I mean, right before everybody shut off more or less because they were being. They got subpoenaed.
I think it's a combination of the two things.
But subpoena for what exactly?
I don't know. Something around. I don't know.
I think it might be on the buyers. I'm not sure. I've heard rumors that it was on the buyers, but I don't know that.
Yeah,
right, because if you're saying that these are the systems that are in place and that they acted appropriately, then nobody did anything illegal and a subpoena wouldn't be flying around. So that raises a lot of questions. If
it does. And what I heard, which might not be right, is that separately from the whole risk thing, also there is subpoenas maybe related to accusations of market manipulation.
Yes.
Yeah.
Which is not so much it's not the Dodd-Frank risk side here. It's was the cause of these market moves illegal? And without staying.
But is that only asking if the cause of it going up was illegal, or also when they shut it off and sent it down? Because that seems to me the part that should be.
These were, I think, about the first one. These were about it going
the first
up.
part.
Yeah,
of course,
I think there's some rule that came out of. Right, I think there's some. This don't quote me on this, but I think there's some rule that really came out of. I don't know if they still do this or not, but like hedge funds. There was always these like idea dinners that they would get together. Like it would be generally revolve like around a charitable event or something. And you'd pay like some ridiculous amount of money to sit at a dinner table and have all these top hedge fund managers, you know, Einhorn from Greenlight and so would come in and basically pitch their best ideas. And basically they were just talking their book. Right. And I think that it became this thing where effectively you would end up with a bunch of people, you know, with family offices or other hedge fund managers that were sitting there in real time waiting for that news to come out. And when it came out, they literally would get in and buy the fuck out of the stock or short it, depending on what the narrative was. And I thought that the regulators like stepped in on that, and they were like, well, if you do, like, their way of regulating it was, well, if you do that, basically in the way that everybody received the information, it actually like turned into a group, and that group collectively now owned more than 10% of the float. So they had to file some level of documentation with the SEC, or they were going to be in violation of
in this case, the Reddit posts are public, the Twitter posts are public. The problem is, are there potential implications for wire fraud, because they're basically trying to convince people to do something to drive up the value of the stock that in the middle of a pandemic has, no right going up, because they're in a retail business when everything's shut down. So I don't think that's going to happen, but I promise you they're going to investigate it anyway, because that's what they do. Right.
But Wall Street is allowed to. I mean, a fund is allowed to. A fund is allowed to attempt to short squeeze a stock.
Totally.
It's not totally clear. So it depends on why they're buying. They're allowed to buy if they think it's because the stock is undervalued, if it has a side effect of short squeezing. It's a different state from saying they're allowed to buy something they think is rich and worthless for the purpose of triggering a short squeeze.
That's my point. That's exactly my point.
Right.
And so you actually run the risk of wire fraud at that point. Now, I made a joke in another clubhouse that maybe they should hire the RIAA and go sue all the consumers. And so, but the reality is the SEC under AOC, Warren, and Biden is not going to go start suing consumers. There's no effing way that's going to happen. No way. Now, DOJ is another story, right? Because they can't interfere with that. And so if there's real fraud and it's criminal, that's a totally different story. But I still think it's a stretch. But I promise there's going to be investigations into it, because that's what
there's so much political game theory in this right now, because the shoe's actually on the other foot, right?
Yeah.
Where, like, they're supposed to be their regulators are supposed to protect Main Street,
right?
And Main Street effectively, like, through one lens, is the guilty party.
Yeah.
I mean, it's crazy.
Yeah. And to be clear, like, I would guess by the end of this that there are going to be subpoenas on both sides of this.
Yep.
And that, like, I think the first subpoenas were against the things causing it to go up. And I'm pretty sure that after the crash, there were subpoenas of the things that caused it to go down. And I mean, I think at this point, like, lots of people are mad. And I kind of think there's going to be, which is sort of an interesting twist. You don't usually see a case like this where, where there's both sides potentially, claiming to be aggrieved. But I do think that this is one of those.
It's like a holding on the offense and a personal foul on the defense, and the two penalties wash.
Yeah, but they'll cancel out the penalties and nothing will happen.
And nothing happens. So let's lost the entire trade and start over again.
Right.
The part that's just unbelievably aggravating is that this is a Trump hangover. This has devolved into clickbait mania, where everything we do in politics is now reactionary to what the latest clickbait is, which is totally representative in what AOC and Warren and how they responded, not actually understanding the laws like we talked about before, that they're actually supposed to be overseeing. And now they're basically following the clickbait trail, right, to issue subpoenas. And your comment, Sam, presupposes that they actually understand why it went up in the first place and why it went down after that, and that they're actually sending the subpoenas to the right people. I have to simply assume that they're not, because they probably don't even know why it went up and down.
Of course. I mean,
to be clear, they're not sending any themselves. Like, they're trying to use Twitter as a microphone to support something which, as you said, they don't understand. And the actual people doing it would be people a little more informed, although potentially massively over empowered because of this random microphone that's chosen to amplify whatever they're saying. And I completely agree. It's like the last 4 years have been an amazing environment for shitheads who want to post incendiary things on Twitter without having any knowledge. It's been a great environment for them. They've thrived. And I mean, we're reaping what we sowed.
Yeah. Well, now there's a vacuum to be filled by the asshole in chief being gone, and they're all going to rush to fill it because their voices can get heard. And that's a big problem for the rest of us who don't want to hear it. Right.
Yeah, it's true. Yeah, I mean, it's sort of like this was, it's hard to have something like Trump without having an equal and opposite reaction, and that's happened. And I think that, especially, I think some members of the Democratic Party, especially, given who ended up winning their primary, are looking for a way to get their voices heard.
Yep. Yeah, I totally agree.
I mean, just to bring it back, and I know we're going to wrap this up very, very soon. We've obviously talked about subpoenas on this side, They'll get punished. But at the end of the day, the real story here is all the people in the middle who lost 20 grand and all they had was 20 grand.
Horrible.
Right. And I got 50 DMs and Twitter messages yesterday from people saying, yep, that was me. Bullshit. $21,000. Yep, that was me. I lost $8,000, blew up my account that I'd been building for 6 months.
Exactly. And it's one of these things where if it's just a halt on stock trading for 5 minutes for people who didn't have any exposure to it, it's shitty that happens. But like, that's, I understand why that is. And that sort of like isn't nearly as harmful of an offense. Instead, the like one-sided directionality combined with the forced liquidations of people who really morally weren't leveraged at a terrible post-impact liquidation price for giant size. Like now all of a sudden you're mixing in not just all of the arbitrariness and cheatiness, actual like financial harm directly done to a lot of the people caught in this. And that sort of like adds its own sort of sick twist to the story.
Yeah. I mean, you should have been able to hold your GameStop. We all say GameStop every single time.
Yep.
Start calling it GameStop.
I don't even recognize
your GameStop stock. You should have been able to hold that through it.
Yeah.
And see what happens tomorrow.
And I can just say that like when someone is 100x leveraged and did that via potentially malicious activity, and then got liquidated and lost 2/3 of their account value because Bitcoin went down 5% on FTX, we will often get a complaint from them, very nastily worded. And boy, do they not have grounds to stand on. I can't imagine what would happen if we liquidated people who were 100% funded with no position, no leverage on at all of any type, and just like liquidated their Bitcoins at a low price, despite them having a fully funded position for huge size, post-impacting 50% down. I just can't imagine what customer support would be like the next day.
You would probably be out of business in a month because everybody would go somewhere else anyway.
Yeah.
Would that happen? I mean, is Robinhood going to be out of business not because not because of legislation, but because they just have no customers left? I doubt it.
No, they're not going to. But they might be 40% as big in their terminal state as they otherwise would have been.
Right.
That's fair. So I know we got to wrap it up. Anyone have any parting thoughts, or you think that we've beat this horse to death?
I just say if you buy Bitcoin and have a coffee, you'd be much better off. Anyway,
and if we can all just say that as our parting thought, I think that this will have been a worthwhile.
I just felt compelled to say it anyway. Sorry.
It's perfect. Well, thank you guys so much for taking the time. I know that this was hastily thrown together, but it was sort of first of all, I wanted to ask the questions to people who knew better than me. The whole, if you're the smartest person in the room, you're in the wrong room. So just surround myself with guys who actually understand this better, but also just so much misinformation and confusion, I think, surrounding this story. So to get some people who actually been in the muck with this, really, really valuable. I hope that everybody found it valuable, and thank you guys once again. We'll do this again soon. The next time that somebody on Reddit pumps a stock to the moon.
Yeah. So tomorrow.
Sounds good.
So
Right.
Tomorrow. Anytime.
You think it's going to be that long?
Well, I mean, the day's still young, so good point.
Right.
Exactly.
Yeah.
So.
All right. Thank you guys.
All right.
Thanks, guys.
Bye, everyone.
Well done.